Imagine your portfolio is like a garden that you've carefully tended to over the years. Each stock represents a flower that you planted into the ground with the intent to have it grow and blossom and look really nice, but sometimes things don't go the way you plan. Sometimes in the midst of all the gardenias, there are weeds that pop up and you need to get rid of the weeds, which is what I just had to do in my portfolio. I sold out of one of my positions, and this was one of the first stocks I bought when I was getting into investing. And as a buy and hold investor, you'll know that one of the hardest things you'll ever have to do is sell a stock from your portfolio. You see, when you choose to invest in a company, you do so with the mindset that you're going to be holding on to it for a long time, even potentially forever. This is based on the thorough research you've done prior to making the investment that inspires the confidence that it will be a promising long-term hold. But like I said, things don't always go the way you plan. Sometimes the stocks you invest in turn out to be weeds. Sometimes they don't live up to your investment thesis. And sometimes you realize you didn't even have a strong investment thesis to begin with, which was the case for me. And in this video, I'm going to tell you what I'm talking about and why this led me to sell out of this particular company. But real quick, I want to know, what was the most recent stock you sold out of in your portfolio? Let me know in the comments below. At any rate, guys, just getting right into it, I sold out of 3M. It was a tough decision, and in doing so, unfortunately, I sold it for quite a big loss. I broke Warren Buffett's first two rules of investing. Number one is never lose money, and number two is never forget rule number one. So definitely not ideal. And showing you my 3M position real quick, I had about 12 shares of this company at an average cost of $165.43, which is quite a bit above the current share price of around $111. And if we look at the returns, we can see over here that I was down about 33% upon selling, which was a $650 loss, so not the best. And if we include dividends into the mix, on a total return basis, I was down nearly 25%, still down $485, which is a little bit better, but still quite a big loss. But it begs the question, why did I sell? And in my mind, there are like 2 or 3 reasons that I decided to cut ties with 3M, with the first of which, as I'm sure you can imagine, just being the litigations hanging over the company. As many of you know, 3M is currently in the midst of some substantial lawsuits, which are pretty uncertain situations that will likely take a number of years to fully play out. And my thought is that the financial burden of these lawsuits could be large enough to impact the company in a way that would result in a dividend that was reduced or eliminated altogether, which is especially possible when you consider they'll be spinning off their healthcare business later this year. And we could see them do something like AT&T did when they spun off Warner Media, just sneakily reduce the dividend after the spinoff. But anyway, if not that, at best, these lawsuits are going to be a major headwind for the company for a number of years to come, and I ultimately decided that that just wasn't something that I wanted to stick around for. With that, the second reason I sold 3M was because I figured I could redeploy the money in that position into other opportunities in my portfolio with more growth potential. I ended up distributing the proceeds from the sale into 3 other positions in my portfolio, which I'll show you momentarily, but as it pertains to 3M, this company was looking pretty stagnant. Looking at the company's revenue, there has been some incremental growth over the last 10 years, but it's really nothing to write home about. And in fact, the average revenue growth over this time period is less than 1%. Overall, though, I have other companies in my portfolio who are growing their revenue at a much faster rate. I have other companies who are expanding their profit margins and becoming more profitable over time, and just in general have more to offer shareholders than what you could get from 3M. But anyway, this brings me to the third reason that I guess brought me to sell out of 3M, and that's just, truthfully, if I'm being honest with myself, I didn't have a strong investment thesis to buy the company in the first place. Like I said earlier, 3M was one of the first companies that I ever bought when I first started getting into investing, and you can actually see me talking about it here. This was like my second investing video ever here on the channel. But I remember at the time, my only real reasons for investing in 3M were because I knew it was a dividend king, which I thought meant it was impervious to like anything. And also I knew 3M's products were everywhere, which is true. They are in practically every industry, and I knew they made things like Scotch tape, Post-it notes, and command strips, which were products I was familiar with, so I thought it would be a good thing to invest in. Now, while these are still some of the good things that I like about the company, I now know, a few years into the game, that these couple of things alone are not enough to warrant a long-term investment. And you've got to remember, guys, I came into this with 0 experience. I had no clue how to look at stocks, and it's still a skill that I'm working hard to develop. I had absolutely no background in finance, and I pretty much had to learn everything myself, but in hindsight, pursuing this stuff for my formal education when I was going to college would have really helped me out, especially in this situation. And with that in mind, I want to talk to you about today's video sponsor, Southern New Hampshire University. As someone who actually didn't finish college, and most certainly wasn't after a degree in finance when I was going, there are times where I don't feel the most qualified to talk about some of the topics we cover here on this channel. Because of that, I'd be lying if I said that I've never thought about going back and finishing my degree. And if you feel the same, if you feel like your experience is holding you back from pursuing the career that you really want, then I am so excited to tell you about today's sponsor, Southern New Hampshire University. SNHU has one of the largest accredited nonprofit online degree offerings in the country, and I want to talk to you specifically about their finance program. In this program, you'll learn to identify long-term corporate investment opportunities to increase shareholder value, apply theories of asset allocation, security analysis, and portfolio diversification to efficiently manage an investment portfolio, utilize the rules and regulations for financial accounting and reporting in a global economy, generate financial records and financial statements for users in accordance with governing rules and regulations, and analyze, interpret, and communicate financial and accounting information to internal and external stakeholders. SNHU is radically affordable, with their tuition rates being some of the lowest in the nation. Also, when you go to request information about one of their 200 plus different programs, a real person will hop on the call and discuss how the program can benefit you personally. To learn more, go to snhu.edu/Ryne or find the link in the description to find out what the current average annual salary is for someone with a finance degree and to request more free information about the program. It only takes one click to find your calling, so once again, go to snhu.edu/Ryne. But anyway, guys, getting back into 3M, from this sale, I had just over $1,300 to divvy back up into the portfolio, and I reinvested those funds into 3 different companies. The first of which was Enterprise Products Partners. I haven't bought this company for a long time, but here I invested about $320 and picked up 12 shares of EPD, which now, taking a look at my position, leaves me with about 85.5 shares at an average cost of just over $23. And with a $26.50 current share price, my position is looking pretty good. I'm still up about 15%. And if we scroll over and take a look at how much income this position is generating, it's one of my portfolio's heaviest hitters, guys. It's bringing in about $170 in dividends for me every single year, which makes up roughly 8% of my portfolio's overall income. But anyway, next up, the second company that I added to was Realty Income. I invested about $300 into this company and picked up 5 more shares, which, if we look at my position, leaves me with about 45 shares at an average cost of $57.26. So with a current share price of nearly $61 per share, I'm up a little bit. And if we scroll over and take a look at the gain on my position right now, just in terms of share price, I'm up about 6%. But on a total return basis, I'm up more like 16.5%. So things are looking pretty good with Realty Income. And once again, if we scroll over, take a look at the income from this position, it's currently bringing in just under $140 every single year in dividends, which makes up about 6.5% of my portfolio's overall income. And I would say for me, this is a pretty comfortable amount. When I start to see positions getting up to like 9%, almost 8%, just over 8%, like EPD here that we just mentioned, that's starting to get a little bit outside of my comfort zone. So I wouldn't be surprised if I don't add any more to some of these positions for a while, like KRC, EPD, OBDC. I don't want any one position to become too much of a percentage of my overall income. Just to be safe, I'd rather spread things out a little bit more. But anyway, the third company that I added to was the newest position in my portfolio, Williams-Sonoma. I invested nearly $700 into WSM and picked up 5 more shares, which leaves me with exactly 13 shares of Williams-Sonoma at an average cost that's now over $130 per share, almost $133. But with a current share price of $138.60, I'm still up a little bit. This position's still doing all right, up 4.3%. And with this being one of the newest positions in my portfolio, this is not a huge income generator for me. I'm only bringing in about $47 from Williams-Sonoma, which makes up about 2.25% of my overall income. But I will continue to add to this position, so we can expect both of these numbers to keep increasing over time. So anyway, those were the 3 stocks I picked up. And then as far as how this impacted my portfolio overall, my dividend income prior to the transaction was $2,122 basically. But then after the sale of 3M and reinvesting the funds into those 3 stocks, my annual dividend income is now $2,108 essentially. So it shaved about 14 bucks off of my annual income, which is really no big deal. And with that said, guys, I think my experience with 3M should serve as a reminder of a couple of different things. Number one, you shouldn't just blindly invest in a company because you see someone here on the internet talking about it. YouTube or Twitter or any of these platforms are a good place to get ideas for a potential investment, but just because Ryan is buying a stock or is talking about a stock doesn't mean you should just buy it or sell it even without doing your own due diligence. And the second thing I think you should take away from this is that there are times where you're gonna be wrong, okay? Not every investment is going to go your way, and that's okay. Even if you make a bad call and lose some money, it's not going to completely wreck you in the long run, assuming that it's not your like one and only position that you had 100% of your funds into, because that would be a different story. But otherwise, consider it a learning experience, and the money that you lost is just the price of tuition. I've lost money on a few stocks over the years, but even with those few losses, my portfolio has still outperformed the market, and I've made more in passive income than I ever thought I would, which is something I'm telling you about in this next video right over here. I'm going to share with you exactly how much money I've made with dividend investing over these last 3 years. And like I said, it's more than I ever thought I'd make. So click right over here to check it out, and I'll see you in the next one.